camera on right now. So I have to press QuickTime. Sorry guys, I'm fucking tired of doing this shit. Every time I gotta turn on the fucking camera. But hold on. Fuck. All right, I got it. Hold on. New movie record. Fuck. Why is my camera so bad, guys? I literally may have to restart this shit. My camera is fucking ass. Hold on a second. Y'all can wait. You guys can fast forward the video. I don't know what the fuck. All right, guys. Fuck. Oh my god, it's so fucking shit. Hold on. All right. So, what's up, guys? So, I'm gonna try to make this video quick, as well as I'm gonna go ahead and just turn the. I'm trying to turn the fucking camera around. Fuck. Hold on a second, guys. Alright, why is the fucking camera so bad? Jeez. I don't even care, honestly. Alright, so, I'm trying to fucking figure this out. Fuck. I'm trying to go with the best lighting. This seems to be the best lighting. Yeah, I like that. I like that, but just let me see something. Fuck. 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 I'm gonna have to edit this video. Alright. So, I know you guys are probably tired of this taking a long time. I'm back right now. It's just been a fucking long day. Okay, so just alright guys, so what's up? And today we are back with another video. It's Wednesday. I'm gonna quickly go and do this video. It is about market structure and trend trading. Whether you're a beginner trader, a professional, experienced, I don't care. Watch the video. This is gonna help you. This is gonna change everything. Alright, so if you're an ICT trader, I don't care. Just watch the video. And yeah, I'm a little weird, so you might want to click off. But yeah, so the first thing we're gonna do, and what you always want to do when you're trading like this, is you're gonna want to go on full screen, and that's actually my #1 secret to doing this. And so I'm not gonna go on full screen because the screen recorder I'm using doesn't allow me to fucking do that. So I'm gonna just leave it the way it is, and then I want you guys to go on full screen and do that. Just give me 1 second, guys. Open file. I'm gonna have to edit this video like a bitch. Float on top. Fuck. Fuck. Alright. Whatever, I'm gonna have to do it like this. So, when you guys press full screen, which is here, full screen mode, if you look at the right side of the screen right now, if we look at this, we are going to go on to full screen, and you're going to click that. And once you click that, it's just going to show the full screen. So right now we're on NAS 100. I'm on a 30-minute chart, and I want to show you guys how I do my market structure. So when you go on the charts, it's probably going to look like this. You're going to see price action all in the middle of your screen. What you want to do, scroll and make price action appear to the left. Once it's to the left, then you're going to want to take your line tool, your trend line, your structure line, and we're going to identify the trend right now together. So I start identifying the trend with my recent low and my recent high. I don't use trend lines. If you do, that's fine. I don't. I use market structure. So we're going to need to find our current low and high. So our current low is here, and our current high is up here where I'm drawing right now. And just so you can see that, the arrow, current high, current low is down here. And within these current high and low, it's called our range, our price range. So there's the range between where price is expensive and cheap. So higher prices equals more expensive pricing, and lower prices equals discount pricing. So you're going to go ahead and put your low here, and then you're going to want to put, this is the previous low I'm drawing now, and this is the previous high. And so in total we have 4 pieces of market structure. And so this is valid structure because it's on, well, my preferred time frame, 15 minute time frame and up. This is on a 30 minute on NAS, and we're going to go on the 4 hour just to double check. And if you zoom in on the 4 hour, we also have market structure on the 4 hour too. And so we're going to go ahead and go to the 2 hour, the one, hold on, I'm trying to figure something out, 1 hour, 30 minute, just like we're on, and here, here's where I want to look at. So if you notice here, before price start to go back up on the 30 minute, we have price coming down, because if you look to the left of the screen, you can see price was at a high and then it started to go lower, and now we're starting to head back up because on the long term, like we identified earlier, market is bullish. So if you look now, look at where the past structure was. So look at where I'm drawing on the screen in white. I'm drawing it in white. So we have all this market structure going down. We had price action going downwards, and then when we came up here, okay, it was still going down, then it started to go back up, down, then it made this little double top, then it went back down, okay, and then what did price do after it came down, right? We had lower lows, prices just going down, and then what did price do? Price went down here, and look, under where my face is on the screen, price went straight up. And what did it do when it went straight up? It broke two previous two previous pieces of structure, which were our double tops, which were right here, right? So I'm gonna draw a green line, and that green line that I'm about to put on the screen stands for double tops and double bottoms. So support, resistance, and just so you know, I take profit at support and at resistance. I don't trade support resistance. I trade smart money concepts specifically. I trade order blocks, imbalance gaps, Wyckoff schematics, things like that. Supply and demand, basically. Supply and demand zones. So that green line is the liquidity. So that would be our buy side liquidity up. So traders thought they were going to sell on that green line because traders that trade support and resistance probably thought, oh, that's resistance. So smart money came up, crushed that, took all the money that was floating there, all those orders, and then what happened was price came back down, and stare at the middle of the screen, focus on the middle. Price came down and now is tapping into some sort of demand zone, because this is where demand originated. And if you look at the volume chart, we have that blue, that's the bullish volume. And so demand came, and now we are expecting price to right here where we're at right now, we're expecting price to just consolidate a little bit. And so consolidations, to me, look at them as the market coiling up for energy recharge, about to blast off, whether it's blasting up or down. So think of it as price is coiling up energy, okay? It's coiling up energy. And so once it's done coiling up energy through consolidation, price is going to come up, boom, break a new piece of structure, which is right here on this white line I'm drawing. And once it breaks that new structure, we're going to see price come where I'm drawing the arrow back down to this beginning white line. And you see how normally I want to show you guys the difference between healthy price action and unhealthy price action. Healthy price action looks like this. So you have, if it's bullish, we have up structure, we're going up, down, up, right? That's healthy. So the market goes up, down, because that's how markets work, right? So unhealthy price action, let's say we're in a bullish scenario. Let's move what I just drew here. Unhealthy price action is when there's so much volatility in the market that the market doesn't have time to correct itself for a pullback or correction. So what ends up happening is the market will just go up like this. Let's say there's some unemployment rates, NFP news. The market will actually just go straight up like this, and then maybe it'll go down like a little bit, and then it'll just keep going up, and then it will forget. So your options to trade would be here. So I'm gonna draw it. So let's draw the zone. So we have some unfilled, we have a big giant gap right here, and we have a big giant gap right here. So I would preferably take the lowest gap, which is the bottom one, which is here where the arrow is at, because the bottom one most likely has more volume, because that's where the demand started. So sometimes what you can do is you can actually determine that through turning on the volume, and then when you turn on the volume indicator, it will actually show you which box that you drew, which area has more volume. and which is what you need, because that shows demand. And basically, it shows which zone is stronger, and then you can actually choose to trade the zone that's stronger based off volume. It's the law. It's actually a law. It's called in Wyckoff, because I trade the Wyckoff methodology. It's called the law of effort. Um, let's see. Sorry guys. Show and Finder. I made a video earlier, and I'm just trying to fucking. All right, back to what I was saying. I don't know where the video went, but I don't really care. I'll do it later. It's right there. So, yeah. So, the first step when you're looking for a trade, I'm gonna make this simple so you guys can actually understand this. The first step you want to do is when you turn your computer on to get ready to forex trade, is know what session you're trading. So, are you trading? Do you trade the London, Asian, or do you trade New York? And if you know what that means, good. If you don't, then you should study that. I personally trade the Europe session, which starts between Europe and New York are the fastest moving sessions because they have the most volatility. If you're trading smart money concepts and you want the market to actually move to make you money, you need volatility. So you want to ideally trade between London and New York. London session is 3 a.m. to 11:30 to 12 p.m. And the New York session starts in it overlaps. London overlaps New York, so New York starts at 8 a.m. and ends at 5 p.m. London 3 a.m. to 11:30 to 12 p.m. in the afternoon, and then New York is 8 a.m. to 5 p.m. And so those are your trading times. So write that down, what I just said. Your trading times. So, yeah, guys, when you start trading now that I gave you those times, the next step you're going to do is like, okay, so you gave me the times. Okay, so I'm going to trade the London session, 3 a.m. to, let's say that works for you in your work schedule because you work in real life at your job during the afternoon. So in 3 a.m. to 11:30, 12, because let's say you work in the afternoon, okay? So you have between that time frame to find pairs to trade. And so what you're going to trade are London pairs. So you're going to trade pairs like Euro, GBP, things like that. So Swiss franc, Switzerland, New Zealand, maybe not New Zealand, sorry, Switzerland, GBP, and Euro are mainly what you're going to look for, like Euro, Swiss franc, GBP, JPY. And what you're going to do is you're going to choose 7 to 8 forex pairs or futures. You're going to choose 7 to 8 pairs. So if you're trading, like this is NAS, so you're going to trade NAS during a New York session because it's the New York tech. All the New York main stocks, all the stocks, because it's in its New York Stock Exchange. It's not like NAS isn't in another country. So what you're gonna do is you're going to actually trade NAS on the New York session. So you're gonna look on NAS at 8 a.m. and yeah, so that's for NAS. So it's more complex when it's forex pair because you have to actually add 7 to 8 different pairs, and you can add 6 now that you have NAS. Let's say you want to choose one future. You can do that, or you can only trade futures. You can do what you want, but I would choose 7 to 8 pairs in general to trade, based off of the news. So and your trading session. So if you trade only London session, trade pairs that are in Europe, and then trade those pairs that are in Europe, accordingly to the forex factory. Because if you go on forex factory right now, and we look this up, you can see that let's say today was GBP, Euro, and JPY news and USD. So I would only make 7 to 8 pairs that consist of those forex those pairs, those currencies, and then that's going to help you actually find setups. Okay, so yeah, guys, I hope this video helped. I wanted to give you guys some value. If you guys want to watch more, you want to connect with me and talk to me personally, just add me on Instagram, guys. It's all my info is down there, and I hope actually that you guys genuinely found this helpful, because I know there's not a lot of people that go in depth and they just make quick videos that don't explain enough, but I really want you to understand. So step number 1, choose your session, so the times that you're going to trade, and choose them based off your life, your personal life, not my life, your life. So if you'd like to trade Asian session, which is a slower moving session, and that works for you because you maybe get home during the evening, then trade the Asian session.